shares of Bill.com Holdings Incorporated rocketed 29% higher in after-hours trading Thursday after the maker of financial software tools for small businesses topped expectations for its latest quarter and gave an upbeat forecast. The company posted a fiscal second quarter net loss of $80.4 million, or 78 cents a share, compared with a loss of $17.2 million, or 21 cents a share, in the year prior quarter. After adjusting for stock-based compensation and other expenses, Bill.com minus 7.79% recorded a net loss of $220,000, translating to roughly break-even performance on a per-share basis. A year prior, the company reported an adjusted net loss per share of 1 cent. The FactSet consensus was for an adjusted net loss of 18 cents a share. Bill.com's revenue grew to $156.5 million from $54.0 million a year prior, while analysts tracked by FactSet were projecting $131.1 million. The company processed $56.4 billion in total payment volume during the quarter, ahead of the $50.6 billion that analysts tracked by FactSet were projecting. Bill.com grew TPV by 20% sequentially, above the roughly 13% sequential growth rate that Bill.com saw in its September quarter. This was arguably the biggest question for investors heading into the print given concerns around the health of SMBs, some industry data points, and considering management had guided to less of a seasonal spike than occurred in the same quarter 1 year prior, wrote Wolfe Research analyst Darren Peller, who called the report excellent. For the March quarter, Bill.com anticipates $157 million to $158 million in revenue and an adjusted loss of 15 cents to 16 cents on a per-share basis. Analysts were calling for $141.0 million in revenue and a 22-cent adjusted loss per share. The earnings come amid a rough recent stretch for shares of Bill.com and other fast-growing fintech names. Through Thursday's close, Bill.com's share price had been cut roughly in half from a closing high of $342.26 achieved in November. The stock registered a nearly 8% decline in Thursday's regular session.